Hi guys, and welcome back to the channel Retail Investing and Trading. And in today's video, I'll go over the strategy on a specific pair that yields almost 70% win rate, so that you can go ahead and backtest that strategy on your own and have this or similar results. The important thing here is to tell you that you need to backtest it, because if it yields 70% win rate for me, it doesn't mean it will produce the same results for you, because our eyes are completely different. You might see something that I wouldn't see. You might find valid something that I wouldn't find valid. That's why the thing is that you just learn the ropes, learn the basics, learn to understand and read the market. Find the strategy, and then do it on your own, but do it consistently, because you and me can have different results. Both of us can be profitable, yet I would take some patterns and you would not. The thing is that you have to do it your way and I'll have to do it my way. Okay, so it's no secret that the cipher pattern is probably one of the most profitable patterns at all. Okay, so obviously the strategy is cipher pattern. Okay, and I'm just not gonna go over just stop here. I'm gonna show you the rules for the cipher pattern here in this video, although there is another video on this channel and I'll link it below and after this video, so that you can go ahead and check out the rules for the cipher pattern, the way it's designed. Because as you probably know, I'm a member of Tier 1 trading company, and one of the founders of a company has actually, by doing a bunch of backtesting, he found out about this pattern. So they basically invented the cipher pattern, and I know that it's being taught a lot of ways on the internet. I'm going to show you the correct way and the way that they taught me, okay? So you can rest assured that this is the only correct way of trading the cipher pattern. The cipher pattern produces around 69%, not around, actually 69% win rate for me on a pair Aussie CAD. And on the time frame, this is a pair, this is a strategy, and time frame hour 1. That doesn't mean it will produce the same results for you, but let's go over the entire process. So here I'm gonna cover the rules right now in front of you. I'm gonna write the cipher pattern, how it looks like. I'm gonna write the rules here. Then I'm gonna stop this recording and I'll start my screen recording on a chart on my PC actually, where I'll identify a couple of cipher patterns with you on Aussie CAD using a web platform called TradingView, and then I'll show you my backtesting results, my spreadsheet, and everything I put in. Okay, I backtested, I'm looking at it right now, I backtested 112 trades, and I got a win rate of 69% and 31% of losers. Okay, I'll show you everything I got. Okay, so cipher pattern rules. First, this is advanced harmonic pattern, and the first thing we gotta understand and practice is how to identify our impulse leg. Impulse or anchor leg is being called many different ways, but the impulse leg is the leg where it all starts, okay? And we're using 4 different moves here. So we're gonna have an X to A leg, then we will have A to B leg, then we will have B to C leg, and then we will have C to D leg. D leg will be leg where we will put our orders in, okay? And this is where we start, okay? For each of those legs, for example, this is our first point, this is our second, this is our third, this is our fourth. There is a rule, okay? This is most individual leg, okay? X point is most individual point, because I might find the X point something else than you, and I'll go over this in charts, okay? But when you identify the X point, which some could find valid and one would say that it's not valid, then everything else is rule-based. Rule-based. There is no discretionary after finding X point. Okay? Okay. So let me delete this and let's start. So this is how the pattern actually looks like. Let's say that you identify candle that looks like this. It's a bearish candle, for example, and you say, okay, this is my X point. So price then moves up, stops here, starts retracing a little bit, and starts printing candles. Okay, so this is your X point, this is your A point. Okay, this is number one from this above. Okay, now we need to identify the B leg, A to B. Okay, and now for the B leg we have some rules. The B leg, the B point has to come, the price needs to retrace at least to Fibonacci level 38.2%. At least touch the 38.2, but not close below 61.8 fib level. Okay, so you would drag your fib levels up from X to A, and you would look where the price touched it. Did the price touch the 38.2 level, and did it close below 61.8, or it did not? It should not close below. Okay, so I'm gonna write this: A to B, price needs to touch the 38.2 fib level from X to A, but not close below 61.8. Okay, that's rule for A to B. I'm gonna put this here. Okay, now when we define this, now we need to have the extension. Okay, so the price goes up. X to A to B, and this is B to C. Okay, now you put your tools out and you're looking for fib extension tool. So you put your fibs on, and the C level needs to be at least touch 1.272% of fib extension, but not close above 1.414 extension. That's the C point. At least touch with the wick, whatever, but not close above 1.414. Okay, so let's write this down. Price needs to extend to at least 1.272 fib extension, which you need to draw from X to A to at least, but not close beyond 1.414. I'll say beyond or above or below, because this is a bull. This will be a bull. This right there, what I'm drawing here, will be a bull cipher. Also, when we are drawing a bear cipher, then the price shouldn't close below 1.414. When it's a bull cipher, then the price shouldn't close above 1.414. Okay, so that's it. Now, when you identify X to A, A to B, B to C like we did here, now, and if price starts retracing like this, we are looking for the D completion point, or C to D, and at D, we will put our pending orders in and set our targets up, okay? So, D point, there is a rule. We need to the price needs to at least be below or touch the B point. So if the D point is higher than the B point, the cipher is invalid. And the D completion is, you gotta put your fibs out and drag the fibs from the X point all the way to the C point, X to C, okay? And then the fib ratio of a D point is at 78.6%. But if this 78.6% from X to C comes above the B point, then the cipher pattern will not be valid. So it has to be at least at the same price as the B point or below it, okay? Okay, so let's remove this. And then the price, let's say that it was here. D. Okay, so the pattern looks like this. And I'm gonna color it in green as its bull pattern. Okay? And now I'm gonna write some rules about C to D. Okay, D completion point is fib retracement level of 78.6 retracement of X to C leg of, I'll repeat, of X here to C here. You draw fibs, you get 78.6. That's the completion, okay? It has to at least touch the B price point. Okay, now targets. Now we have to think about targets and stop loss. Okay, and now it's a different way. Well, a lot of people can approach this in a different way. Okay, one of the ways of the approaching to cipher pattern is setting up some kind of a fib extension from C to X, and then trying to put a stop loss below this extension. The thing that I'm using is also, I've been taught from tier 1 trading. I'm using the 113 fib extension from C to X. Okay, stop losses. I'll just say I am using 1.113 fib extension from C to X leg. I know that there are I know some traders who are using 127, okay? 1272. I know some people that are using ATR level below X point. ATR below X point. But that can be discretional. You can test it. You can wait for the price to come lower. You can do a bunch of things. But the thing is that these are conventional rules and this is the way how the cipher pattern should be traded, because these are the guys who taught me this. They created the pattern, they found it. They didn't create it, the market created it, but they found that this pattern is repeatedly repeating itself in the market. The thing is, the trick, that very rarely you get one-to-one risk to reward, okay? So maybe if you're a trader who needs one-to-one risk to reward, you would wait for the price to come a little bit down here and then engage. But I know a lot of traders, because of the win rate of the pattern, they're engaging, even the risk and reward is not there, okay? And now the targets. We know where to put our stop loss, which should be probably, maybe, let's put it in red. Okay, stop loss. And what about targets? Now we need to put our targets. Okay, so for this case, I'll create a new pattern. X to A, retracement to B, extension C, and then decompletion is here, okay? So, what are our targets? Let me color this again. The targets are retracement from C to D, 38%, 0.2 is target 1, and 61.8 fib level from C to D is target 2. Okay, so you will get your fibs out, you will put them at C to D, starting point, ending point, and looking for a price to retrace back to the target 1 as target 38.2%, and for target 2, 61.8%. Okay, it would look like this. Like this, and then your risk would be probably here, like this. That's it. That's the cipher pattern. This is a short explanation of the rules for the cipher pattern and the pair that I'm using to get 69% win rate, the time frame, and the pattern on Aussie CAD that I'm using. Okay, the rules for the rest of the patterns, there are specific. Every video, I recorded a few more videos. Every one of those videos are going over rules of a particular pattern that I'm using on a different pairs as well. Now, as I promised, let's go to the charts on TradingView and let me show you my backtesting results, and let's find a few cipher patterns on Aussie CAD together. But before we go there, click that like button, subscribe there, and click that bell button. Spread the word if you find this content valuable, and let's help as many people as we can. Catch you up soon. Bye-bye. Okay, and here we are watching the TradingView charts, and I have opened the Aussie CAD 1 hour time frame. Now we're going to look for the ciphers together. After we find few ciphers, hopefully we will find them. I mean, we should find them because I did backtesting results and they are here. But I didn't want to go over my backtesting results and the ciphers that I already found. I wanted to find them in front of you and show you how you need to do backtest. Okay, so I'm here on the 30th of January 2017, and we should start moving slowly, candle by candle. Cipher pattern is we need to identify the X legs. So for example, like this: X to A to B, B to C, and then the retracement. No, X to A to B, B to C. Then we're looking for the retracement. Let's see, X to A. So X to A is this. It touched the 38 point. It didn't close below the 68 retracement, but I already have my extension tool. I can do this. I can remove this. It closed above 41 here. You see, it closed above 41. This is little trick in the properties where you can select on your fib levels minus 113, minus 27, and minus 414, and then you will see it's actually 127 extension, it's 1.414 extension. Let me show you this little trick. So this is the extension tool, right? So it's extension X to A and back here. See that 1414 and 1272 align with minus 027 and minus 0414, so that I don't need to pull out my extension tool each and every time. I go in settings for my fib tools and just write minus 0.27 and minus 0.414. Okay, so that's a trick that you can use to so that your fib levels can immediately show you the extensions as well. Okay, so but this is not a cipher pattern because we have an X to A valid, A to B valid, B to C would be valid if we wouldn't have this close above 414. Okay, so we are searching forward. I'm gonna remove this. Okay, you gotta go candle by candle when you're doing your own analysis, because that's the only correct way, because the market didn't print those candles, so you cannot rush through this. But here I might do a little bit faster because I didn't find a cipher pattern. I didn't prepare myself for this video. I just randomly choose a section of a time in 2017 in hopes that we will find ciphers. Okay, so let's see, X to A, A to B. Let's see how would that work. This is the fibs. Okay, X to A. No, we didn't touch. Okay, we did touch the 50 and 30, the 38 retracement. We didn't violate the 61.8, but we didn't extend up to the 1.272. Okay, so nothing here. Let's move forward. Nothing. Up, X to A, A to B, B to C, but I bet that this will close above 1414. Yes, we closed above, nothing here. Let's move forward. And this, my friends, is a reality of manual backtesting. And in the 2018, I did over 2,500 backtesting trades just to get results so that I can create a system based on rules and forward tested and traded in 2019. In one of the videos, I'll cover what I'm trading, what I backtested, and I'll show you all of my backtesting results. Let's see, nothing that would click for me. We would have this, but no retracement. This could be it. Okay, but let's see. I didn't see it as the market moved. Yeah, we didn't quite. Wait. This is X point. Okay, let's see. Okay, yeah, there is our first cipher. Okay, but look, I would say that this here is our X point. But the thing is that probably that's the thing. What I was saying in the first part of this video is I probably when I did backtesting, I wouldn't take this as the X point, because I would take this, maybe this, but I didn't see this as a valid X point. But that doesn't mean that when you're backtesting, you wouldn't see it. Maybe you would. Okay, so the X points, in my opinion, are discretionary. Everything else is based on hard rules. So this is how you would trade it live. Okay, so we go here, we go up, we retrace a little bit, and we move up. Okay, and now, price starts retracing down. We put out our fib levels, we check out our rules, and we can see that we did move up. We did retrace the 38 level. We touched the 38 level from X to A. So the B point is here. It didn't touch 61. It didn't touch and didn't close below 61.8 fib level, which is okay. And then from B point, it extended and touched. You see, it touched the 27. The price can close by the rules above the 27, 127.2, but should not close above 1414, which it didn't. It barely touched the 1.272. Okay, so it is a valid point, and now it starts retracing. Okay, so it needs to retrace. Our pending order needs to be at 78.6 fib level, but from X to C. We have X, A, B, C. Okay, so this is the cipher. X, A, B, C, and D will be somewhere around here. Okay, let's see the retracement. Okay, where does D falls? Come. D is here. Okay, and you can clearly see now when the price touched the 78.6, it wigged down, it filled our order, and then went up and hit our targets. Our targets should have been here. 38.2 is our first target, and then 61.8 would be our second target per rules. So this cipher pattern would hit both of our targets. Okay, now let's remove this. Let's move forward. Okay, we have X to A, A to B, B to C. Let's see what will happen here. Now it will probably, yeah, it closed above 1414. Exploded up. If you find this a valid X point, X to A, A to B, B to C, this could be a good. No, we didn't touch the 27. This is not something that I would consider a valid pattern. And let's move forward. Let's see what else we have here. Okay. The price started retracing. We might see X to A, A to B, B to C. Let's see, do the fib levels match? Okay, yes, we have something. There we go. Okay, let's see what will happen. So we have X to A, A to B, we touched the 38, we tested it. Then we extended up, we touched the 27, we didn't close about 414, and now we started retracing. Okay, so, and we need to retrace to 78.6. This would be our entry point. So let me draw the cipher. X to A, A to B, B to C, C to D. Okay, now I mentioned the targets in the video. So the stop losses, I mentioned that I'm using 113 fib inversion, fib extension from C to X. Okay, so my stop loss would be here, my pending order would be here, and I would go long. Stop loss is there. Okay, but we are trading two orders. We have target 1, target 2. So my second order would also be here. Stop loss is the same thing. And we just gotta solve the targets. Targets would be from C to D. And then we have target 1, target 2. Okay, let's see what would happen. Prices trading, going up, going down, up, almost until it almost reaches our pending order. Up, pips away, boom. Well, depends. Now, it might get you filled, it might not. We will see what will happen. Okay, so basically, if this filled your order, you would already hit target 1. You see here, and then if you're trailing stop to a break even, price would almost stop you out to target 2. But we need to see it comes down, comes up, comes down. This, guys, is psychologically so hard when you're trading live. Boom, target 2 hit. Okay, so if you're front running your pending orders for a pip or two, this would probably fill your order, and then you would hit targets 1, and then you would consolidate here, move sideways until it hits target 2 here. You see, that's another winning cipher pattern. But the good thing that I see here, I will remove this. I'll actually do this. We could have a cipher within a cipher. Let's see this. What do we have here? No, we don't. See, X to A to B, it hit 38, it hits 38, but then it didn't extend to 27. But okay, I think you got the point. You see what the backtesting really is, how you need to go through the markets and backtest each and every pattern that you see. Doesn't mean I would see this one, but I remember I didn't see this one until it passed me. I catch this one before I even saw what the market is doing, right? And this is what's actually happening when you're trading, okay? And in 69% of time, for me, my results were giving me that I'm winning 69% of time. It could be bigger for you, or you can have a less percentage of wins for you. But and as I promised, I want to bring you my results. Here we are. Okay, so this is this backtesting spreadsheet that you get when you're a tier 1 trading member, and that's what I got, and this actually elevated my trading to another level. Okay, in this backtesting spreadsheet, you gotta put the entry date, the time, currency pair, chart on what time frame were you trading. Okay, as a trading system, type of a trade, ATR, what was the ATR when you were taking the trade, entry price, initial stop loss, targets 1, targets 2, when did the trade close, what was the time, position exit, and then the spreadsheet calculates this for you. Okay, and as you can see, in this span of 2012 to 2018, the cipher pattern on hour 1 gave me 112 trades, netted me 1100 pips, and a win rate of 69% of time. Okay, that's it. Yeah, sure, there are a couple of sheets here. So this is the equity curve. So if I were to trade this cipher pattern, the patterns that I see throughout this year, throughout this time frame, since first of June 2013 to 2018, because this is the date of my first trade, I believe. Yeah, so it's 1st of June 2013, and my last trade was of 18th of April 2018 that I backtested. And if I were trading live the cipher pattern throughout this time, the results would look like this. Now this is a spreadsheet that allows you, it's very complicated, but very great spreadsheet, and I'm thankful that I have this, that the tier 1 trading company actually gave it to me when you become a member, and it really helps me to track all of my results and all of my backtesting results. Guys, remember, I did over 2,500 manually backtests, just like the one that I just showed you. It's not just ciphers, it's the bats, Gartleys, some other strategies, etc. That's the hard work that you gotta put in before you even start trading live. With that being said, I have to do a promo again. Click that subscribe button, click that bell button, subscribe, share the channel, and talk to you soon. Bye bye.